Welcome, traders. In this video, we're going to review the week of August 16th through August 20th, which was a pretty volatile week. And also what I'm going to do is I'm going to incorporate another divergence idea, which I had done in a previous video. And that divergence idea was using the VXX, which is the tradable VIX. And the legend that we're going to be concerned with is this. Up here, you can see that if it's just a red or green circle, I am denoting a winning or losing SPY divergence trade. If there was a VXX divergence also included, and it was a win, as we have down here, the arrow is going to be green. If it was a loss, the arrow is going to be red, as we have right here. And if there was ES divergence at the same time as we had both in this trade and in this trade, there's just going to be a black arrow. And at the end, we'll take a look at what the statistics were for just the SPY divergence alone, the SPY divergence with VXX, the SPY divergence with the ES, and what happens when all three divergences line up. For this test, I am using the 25-second ES template for the VIX real-time signals. And if you are interested in the settings for the VXX chart, here they are. For the VXX chart, I'm not reconstructing the tape, so I have a minimum filter of 1 and a max filter of 2 million. The point deviation value is 15 cents, and the number of key points is set to 3. The zigzag similarly needs to be set to 15 cents. The KP2 ratio, again, should not be set to reconstruct tape and have a minimum filter of 1 and a max filter of several million. The deviation value is again 15 cents right here. The number of key points is 3. And for the KP2 itself, the same settings apply. We are not reconstructing the tape, minimum filter of 1, point deviation value of 15 cents, and number of key points set to 3. The bloodhound is not needed on this chart. It's also important to understand that looking at the VX chart, when we have a sell signal, such as right here, that is actually a buy signal on the ES SPY. And just as that is a buy signal here, where we have this long signal here, that is a sell signal on the ES SPY. What is also important to note is that for these tests, I am only using the two types of divergences on all three charts, and that is the distribution and accumulation divergence and special divergence. The divergence that's showing here and showing here is what I call regular divergence, and that's not going to be taken into account on any of the charts, whether that be the ES, the SPY, or the VXX. So with all that in mind, you're going to see the trades indicated here on the SPY, and you can see me track them as the crosshairs move together here. So we're going to start out on Monday morning with a very good short trade worth a little over 11 points. Followed up by another short trade worth about 4 points. Now, again, what I need to emphasize is that in real time, after we made this trade, and this is probably one of the most important things about ZoneTrader Pro, is we're going to get this long special divergence signal here, and that is important for a trader to understand whether or not he should still be in this trade. When we look down here, we see that the VIX was still going with us, and for part of the time, the ES was also. But if we did not take profits when we were warned, that would have led us into a trade where that was not going to work out so well. Here, I've marked that as a loss because as we look down here, the VIX was still working in our favor. Now, how do we tell this? If you watched any of the previous videos, what I've explained is that half of this VIX signal is made up of the VIX itself, of various VIX signals. There's 3 of them. And half of the signal is made up of the tradable instruments. And there's 3 of those. So if price is rising here into this trade right here, then we will assume that since price is rising, the greens that we are getting are from the price, and that the reds that we are getting down here are from the VIX. Now, what is also interesting to note is this is where the divergence went non-divergent, and it was also exactly where we got our sell signal. So if we're looking at this as a loss, our loss would have been incurred almost immediately upon entering the trade, because as you can see, here are the bloodhound signals. And if you had waited until the VIX had fully turned green, you would still have been out just about where your entry was. And we can look at something here, and if we draw this line right here is exactly where we denote the change in the VIX charts, going from a VIX short to a VIX long. And again, our loss here is minimal, if any. Here we have a second loss right here. Our VIX was completely green. We would have gotten a signal probably somewhere around here, but the VIX stayed green the entire time, and that would have ended up being a full loss as compared to our small loss that's back there. Here we have another trade that I've marked as a loss, but actually resulted in a win. I'm marking it as a loss only because the divergence indicator went dark blue. And a dark blue divergence indicator is doing that because what is happening is price has been exceeded, so there is no longer a divergence. At the same time, we did have the VXX giving us a sell signal. Price traded up literally just a couple of ticks until it traded down in our favor. But because the signal itself went red, I've marked that as a loss. Next, we have a pretty clean buy signal here, which is a trend trade on both of the charts. We also see that we had a 116 for a KP2 ratio, and that was preceding a 166. These are very high numbers and indicative of an accumulation as price traded from the highs to the lows. We're now on Tuesday's chart, and we start off the day with a special divergence long with the VXX. Again, that trades into a real-time SPY divergence short signal, which if you used it to get out, you profited. We followed that up by a second SPY divergence signal, which was good for 6.5 points. At about 10:15, we got a sell signal here, which would have resulted in a full loss. And that was again followed up by an identical trade to what we just talked about, where I'm calling this a loss because the distribution divergence has gone blue, but as you can clearly see, we had VXX divergence. It traded about 4 ticks higher after the signal and then was a successful trade. But as far as the statistics go, we are going to call that a loss. We follow that up with a distribution short. And again, on the opposite side of that, after we get about 3.5 points, we can see that we not only had special divergence on the SPY telling us to get out, we can see that on the ES chart over here, we had accumulation divergence telling us to get out also. Now, here's a trade that is not marked. However, you can see that we had special divergence, but we just didn't have any SPY divergence, but we had special divergence with a red VIX. Again, a trade that was not marked and part of the statistics. We then follow that up with a regular trend trade where we had distribution divergence on the SPY. That was a fairly good trade for a little over 13 points. And that did also have the VXX divergence with it. Next, we had a distribution short signal here with a red VIX. And again, here we go. The statistic is going to call this a loss only because the SPY traded a couple cents higher, literally just 5 cents higher than it had previously. And so we're going to call that a loss. But in reality, that trade worked for almost 16 points right here. Next, we have a distribution short signal with VXX. And again, a second distribution short signal with VXX. And again, after we get our 5 points, what do we have? We have a special divergence long signal telling us to get out. That's followed up with a special divergence buy signal, which was good for approximately 8 points. And it had VXX divergence with it. Next, we trade into an accumulation buy signal with VXX divergence. And you're going to note on the ES chart that there was also special divergence that went non-divergent at the last second. So I did not mark that as a ES divergence signal, but we clearly had the VXX going into it. We then had a distribution short trade with VXX, good for about 5 points. Here we had a special divergence long signal. And as you can see from down here, we clearly had the VIX going for us. And this would have led to a full loss, even though the signal itself stayed special divergent for this entire time. And as you can see, what ended up happening during the sell-off, they were net buyers by 150,000 shares. That ended up taking price almost 11 points higher. But again, this is where we would have likely have made our trade from, and we would have gotten stopped out. We're going to follow that up with a special divergence long with VXX and take that into the close. And that would conclude Tuesday. On Wednesday, we're going to have a special divergence short trade with VXX. Over on the ES chart itself, we are trading into an exhaustion pattern that gives us a little over 8 points. We then follow that up with a second distribution short trade, and we had distribution on both the SPY and the ES here. We follow that up with a third distribution short trade here and a fourth distribution short trade from here. Now you notice that our signal was from back here and we were printing green VIX up until this point right here. So that's why I put the circle where I did, and we are literally just a tick or two off of the apex high right there when Bloodhound gives us our red VIX and our red ES signal. Next, we're going to have a distribution short, again, which just trades 10 cents higher than the previous high. So we're going to have to call that a loss, even though the VIX was with us the entire time. That takes us into a distribution short trade. Originally, we had green VIX and green ES. And once again, the VIX flips right here. We can see that quite clearly on this bar right here is where it flips, giving us our entry. And this is one of those combos where we had both special divergence on the ES chart. You can see that on the right, and we had VXX divergence also. That's followed up by a distribution short trade along with distribution on the ES chart. And again, I would come back here and note the extremely high KP2 ratio of a 167 on this trade. Get about 5.25 points out of it. And again, we're given a real-time signal. And not only are we given the real-time signal down here, but after we make the trade, we can see that Bloodhound is giving us a green buy signal here. Now, this brings up something that the trader should take into account for. If you are in this trade, how are you going to handle it? I'm going to show you one more example of this. And basically, you're going to have three options. Your first option is what is against the trading rules, which would be reverse and go long. We don't have SPY divergence at this point. Your second option is to move your stop down so that you're not going to take a loss on this trade. And your third option would be to simply close the trade. Now, my job is not to give you what I would do. It's your job to make a decision, and you should have that decision made before you begin to trade. Next, we follow that up with a distribution short trade that had VXX divergence. We have another special divergence short trade, again with VXX divergence, which turned out to be an excellent trade. And then we had one distribution short trade, which also had distribution on the ES chart going into the close, and that again was an excellent trade. So we're going to start on Thursday, and on Thursday we have our VIX is completely red down here. There's nothing green. So we're going to take this distribution short trade, which also had VXX divergence. It was good for about 7 points. Again, we were being given a warning that we had special divergence in the SPY and buying down here. That takes us into a series of very profitable trades, which we will start with an accumulation divergence with VXX, an accumulation divergence with VXX, and accumulation on the ES. Another SPY accumulation here, and a SPY accumulation with accumulation on the ES here. We have special divergence with VXX here. We have special divergence with VXX. We have special divergence with accumulation on the ES here, good for about 10 points. That takes us into the 11 o'clock hour, where we did not do so well. We first have this accumulation long trade with VXX divergence. Again, it goes about 10 cents lower after we lose the accumulation. So we're going to call that a loss, even though it ended up trading higher. Same thing is going to happen here. We had distribution divergence on both the SPY and the ES, and we also had VXX divergence at the same time. That's going to trade about 2 or 3 points higher. Then we have a long signal here that was not going to work out for us. We have this double divergence accumulation and special divergence signal, and we have accumulation on the ES. And we could see that while the numbers weren't completely huge, they were increasing in value. Now, this is where we can learn something. Here, we're going to have a SPY divergence trade, and we're going to call that a loss. But what is important is how we read the KP2 ratio indicator right here. So this is the area where we're getting this SPY divergence that we're going to end up taking for a loss. And what I've done is I was doing some training, and you can find this trading under the Getting Started with ZTP tab under support. And all the way down at the bottom is a volume analysis PDF file. And in this volume analysis PDF file, I go through all the setups. I tell you how I set up the charts, show you all the indicators, and then we talk about when price and ratio are in sync, when they're not, and when we are in strong trends. If you have the software, it's very informative to be studying this so that you can understand what the KP2 ratio is telling us. So if we go back to our ES chart, what I'm going to do is I'm marking in red when something is not in sync, okay? And I've marked in red right here that this was not in sync. In other words, price was rising, but the ratio was falling. And when that happens, that is bullish because the sellers are stepping away. Now, if the sellers are stepping away right here, doesn't that make our accumulation trade here even more important? So what is going to happen here? I've again marked this in red, and here's why I've marked it in red. Price was going sideways, and when the price was going sideways, the ratio was going down. And again, what this downward movement here is suggesting is that they are accumulating contracts on limit orders here. Now, in green, what is happening is from this point forward, there is resistance being put in, and this is a significant amount of resistance. So that is why this is in green right here, because price and ratio are responding in sync. However, this is the point right here where sellers basically gave up and began pulling their limit orders. And when they begin pulling their limit orders, what happens? The ratio then goes down. Price and ratio are no longer in sync, and that is why I've marked this red here. And as you can see down here, again, I'm marking this green because as price was falling, the ratio was falling, suggesting that there was an accumulation. That's basically the way we're going to read this. So if we take all of that into account, if we take the fact that sellers were stepping away right here, and then buyers were accumulating right here, again, we have our options. We could short it, and we were actually being given signals to short it. However, the KP2 ratio right here was telling us not to do that. If you remained long, you may have taken your stop and just simply moved it to break even there, or you could have exited the trade and just waited for the next opportunity. If you'd exited the trade, you still would have exited at a profit of about 3 points. The next thing we're going to have is a distribution short trade here with VXX divergence. And then as that goes about 3.5 points lower, we have the VIX flips on us at exactly our entry point. And we also have VXX buy divergence at that point also. So that took us up approximately 7.5 points. Here we have an accumulation long trade, which I marked as a loss because our VXX was going with us. But as we can clearly see on this bar right here, as we are losing our accumulation signal, so at this point we've maybe lost 1 ES point, our VIX is flipping and the entire bloodhound signal is flipping. So if you had read this properly, you would not have had to take that as a full loss. We follow that up with a distribution short signal and a second distribution short signal with VXX divergence, good for about 11.5 points. Now, I did not mark a trade here because, as you can clearly see, we had nothing red here, which meant that the VIX was not giving a signal either way, buy or sell. The only reason that this is green right here is because the price was rising, so this does not end up being a trade there. However, as you can see, we had both SPY divergence there and we had ES divergence on the right side of the chart. And that was good for a little over 6 points if you decided to go outside the box and take that. We follow that up with a distribution short trade with VXX divergence, good for a little over 10 points. We follow that up with another distribution short trade, good for about 8.5 points. Here again, we have a distribution short that if we got in it, we are being told to get out of it. The signal goes non-divergent right here, which is less than a point after our entry. The VIX does stay short, and if you had stayed with the trade, you would have made approximately 5 points from your entry. However, we are going to call that a loss in our statistics. We then follow that up with a distribution short trade here, good for almost 6 points. Again, down on the lows, we're being given SPY special divergence, warning us we need to get out. We then follow that up with SPY special divergence long. Again, here is our divergence signal going non-divergent and calling that a loss. Again, our divergence signal going non-divergent and calling it a loss. However, neither one of these would have been a full loss. We have a long special divergence trade with VXX here, good for about 5.5 points. We follow that up with a distribution short for a little over 6 points. And then again, we have a losing distribution trade with VXX divergence that just traded approximately 10 or 15 cents higher than the previous high, and we will call that a loss. That brings us into Friday. We're going to start it out with a special divergence long trade, followed by a second special divergence long trade, the second one being good for 15 points. We're going to follow that up with a third special divergence long trade. All of those, of course, had VXX divergence. We're going to follow that up with two accumulation long trades, both of which had VXX divergence and had ES accumulation on both setups. We follow that up with a distribution short trade that had VXX and distribution on the ES chart. And again, we have one of these losses that only becomes a loss because price traded at the previous high. And again, we had ES divergence at that same point. Price did sell off. If you took the trade and exited it, you would have exited it for a profit. Here we have a long special divergence trade. Here we have a long special divergence trade, which trades about 3.5 points higher, and then into a distribution short, giving you a warning to get out. And we're going to wrap up Friday with a long special divergence trade here and a short distribution divergence, which also had distribution divergence on the ES chart, and we were making an exhaustion pattern over here also. And to get back to the teaching aspect of the KP2 ratio, you can see that as price was climbing here, we had a ratio that was just basically going straight across, and that is not what we would want to see if we were looking for resistance and a short trade. However, here, as we go into the exhaustion pattern, that is exactly what we want to see. We want to see a rising KP2 number, which is indicating resistance here at the side of our trade. And that's going to wrap up all the trades for the week of August 16th to August 20th. So now when we look at the overall win rate, we have to, of course, remember that past performance is not necessarily indicative of future results. We saw a total of 65 trades, of which 47 were winners, which comes out to be about 72.3% win rate. When we look at the SPY divergence, if we had ES divergence, there was a total of 14 of those, and of those 14, 12 were winners, giving us an 85% win rate. When we look at SPY divergence with VXX divergence, we had a total of 43 instances with 33 winners, giving us a 76% win rate. And lastly, when we had SPY divergence with the VXX and the ES all divergent, we had a total of that happening 7 times, which is an 85% win rate. On the Zone Trader blog, you can find the 2 other videos where I did a week in review using the same template. And on the July 16th video, I also combined that with the ES divergence So the takeaway from all three of these videos are basically the same, is that the idea of trading with the VIX is an excellent way to develop a strategy. However, it does require the trader to also develop an exit strategy along with this entry strategy. And what it also demonstrates is that if you have rules for your exits, even though there was 18 losses of the 65 trades, that many of those losses were contained to a point. And you saw how on the video that was demonstrated. And that is probably the most important part of this, is that you see what happens when the VIX flips and tells you that you are wrong. And at that point, you may only be losing either nothing to a point. And if you develop an exit strategy that takes that into account, those losses, not only do you have an overall winning percentage, but the ratio of your wins to your losses as far as your points go is going to be significantly higher if you do the work and create an exit plan for what I've described here. I want to thank you for watching. Let's all remember to stay safe and have a good trading day. Thanks. Bye.